welcome back to the Daily Zest. I'm your host, Randi Hipper. Whoa. Okay. Thank you so much, Tyler. $10 super chat right off the bat. I appreciate it. That's so cute. That little emoji you put in there. Welcome to the show, friends. I hope everyone is doing well today. This show is sponsored by Market Cypher. Make sure to check out that link in the live chat and in the description, and you could use code MissTeenCrypto at checkout for 20% off. Friends, it is a lovely day. If you are feeling lovely, if you are feeling zesty, if you're feeling the good vibes that life brings us, smash the likes. Share the stream out with friends so more people can learn about what's going on in the crypto space, and say hi in the chat. We're all friendly people out here. Speaking of the chat, I want to say hi. Let's talk. Let's interact with one another. We have Randy, John Germain, Colin, Hader, welcome to the show. Nash, Bullduck, nice to see you. Ozzy, you made it, Ozzy! Everyone in the chat, say hello to Ozzy. He's so fun. Tyler, what do I think about Miss Gen Z Crypto for my new name? Thank you for the suggestion. What do you guys think? Can you give me a little bit of your opinions on what Tyler's saying over here? We got Beardy Day out here. Nice to see you. Ken's Log, nice to see you as well. We love Ken's Log out here. Please follow him on Twitter. Lee, the Lost Lannister, I'm so dead. Nice to see you. Ian, daughter of the cosmos, peace and blessings to you as well. Geronimo, nice to see you as well. Hello, hello. Friends, oh my gosh, we have news. We have Meninja also. Hi, Meninja. My chat just refreshed. Meninja's here. Rusty Bot is here as well. Janix, GM, Midnight Madness. Nice to see you as well. Wow. Yes, friends, I do have curly hair again. I know like people are confused. But again, it's nice to see you guys using your awesome little emojis in the chat. The members, if you have that zesty star next to your name, you get to use those spicy emojis. I would love to see you guys using those in the chat. I love to see them. I want to upload more. Like YouTube's so tricky with those, but I'm going to upload more. I love those stickers. I'm like actually obsessed with those. Thank you guys again for coming out. I really do appreciate every single one of you. We're going to get into the nitty gritties, but before that, please, I see so many people are watching. Smash those likes. Share some love. Thank you. Okay, let's kick into the stream. Hi, Aaron. Nice to see you. Welcome. Okay. Boopity boop boop. Boop. And you know how I feel today, actually? I would love to demonstrate it for you. I don't want to put on the sound because you guys, I might get copyrighted for it. But this is a short I put up yesterday. Look how funny it is. These little dogs just dancing like that. That's how I feel. If you guys want to know how I feel before I go on stream, this is literally it. Look at these little dogs, bro. Okay. All right, I'm just playing. But I really do I feel that zesty energy today. We're going to hop into the markets. We're going to do a market recap as we always do because we're in crypto, friends. That's why we're here. We have Bitcoin. You guys could see it there at $22,560. As you can see, friends, we're down 1.75%. We are slipping away. We had today, the lowest was actually $22,346. Yesterday, our high was, let's see, $23,458, right about, was the top of this wick. Friends, we cannot hold this 23K, 24K mark. We do know, if you guys were tuning in yesterday when Crypto Zombie was on the show, he was dropping absolute alpha, and I wish I could pull up the clip right now. If you guys, please, I really suggest you go check out that show. It was so awesome. So shout out to Crypto Zombie too. But he was mentioning that there was like a death cross and all of these things going on the charts that hasn't happened ever for Bitcoin. So if you guys didn't see that show, definitely tune in and look at where we're looking at the charts. Definitely, I do feel like there's a big move coming one way or another. We're going to see it. I'm very excited. I want price action. We need some movement in the market. And again, we have Ethereum at $1,627. Beep. $1,627. You guys can see that right here. Yesterday, we did have a high of 1,698. Again, did not touch the 1,700 mark from what I can see here. We're going to see what happens. Again, we do know that even 23,000 and 24,000 was a rough spot for Bitcoin, as we can see here. And Ethereum, that little tough spot is 1,700 because we've been tinkering in this mid 1,600 range for a little bit now. Again, might be ready for a pop-off. We have Litecoin as well, sitting at $96. Litecoin, again, was up, in the hundreds, a big psychological level, kind of, again, tinkering with this $100 level, just like Ethereum with the 1700 level, except that Litecoin is maintaining it where it is a little bit more. We have, again, Litecoin down 3%. And as well, if you guys are looking at what this zesty indicator down here is, it is Market Cipher B. So again, shout out to Market Cipher. As you can tell by the title of today's video, Twitter was down bad, friends. Twitter was down bad. But Bitcoin was up. Bitcoin still works. The blockchain still works. Unfortunately, there was a mass outage. Elon Musk really didn't say anything about it. The only thing Elon has been tweeting was yesterday that Twitter has been informed by the Turkish government that access will be re-enabled shortly, and recommendation algorithm should be fixed tomorrow, meaning today. And really nothing about the Twitter outage. What did happen, though, was Twitter, this outage kind of happened after they put out a tweet that you can now do more words on Twitter. I think the character limit is around 4,000 characters now. After they put out an initial tweet, which it seems that they maybe deleted, unless I'm looking at the wrong account. After they announced that, Twitter completely shut down. They obviously tweeted words, and more words. US Twitter Blue subscribers do have access to long-form tweets. Everyone's going to write a whole novel on crypto Twitter now. It's going to be insane. We really don't know what happened with Twitter. As you can see here, there was a Fortune reporter that heard Elon Musk email to his Twitter staff, please pause for now on new feature development in favor of maximizing system stability and robustness, especially with the Super Bowl coming up. Elon wants to preserve Twitter, make sure everything's okay. As you can see, Watcher Guru did tweet yesterday. This Watcher Guru's always on it. They said Twitter is down worldwide and users were unable to tweet, and this was tweeted via the developer API and clients are unable to tweet. Pretty wild. Twitter was down. Apparently, there was a mass outage. I would like to have this confirmed. If anyone can confirm it for me, this is just what I saw on social media today. So again, it's not 100% confirmed, but apparently a bunch of different social media and platforms were shut down yesterday. Mass outages. Actually, the other day on Instagram was down for a little while. I know I was trying to post videos and things like that. It was all done. It was all kaput. So, friends, be careful. But we do know Twitter was down. Bitcoin is up, still running the blockchain, running beautifully. Because why? It's a collective, not a centralized entity. It's a collective of the whole world running and mining and transacting on this network that makes it what it is. Woo! The more we use the Bitcoin blockchain, the more secure it becomes. Mr. NC, nice to see you. Welcome to the stream. Marky Mark, what have you missed? Not much. We pretty much just got started. So I'm happy you're here as well. Anyone else? OG Backroad Crypto Bootleg, nice to see you too. I see a bunch of emojis in the chat. Bassbug, hello. Nice to see you as well. Welcome. Nashgate, the Freedom Network. Absolutely, absolutely. I'm ready for it. Joshua Null, just got a sub. Hopefully I'll learn something. Hello. Well, I do hope you learned something. Hello to you too. Welcome to the show. And Binu is here. Joffrey is here. JC Crew, nice to see you. Check, nice to see you. Oh, we have so many people in here. Again, friends, smash the like. Say hi in the chat. We're all here. We're all here to chill. One thing that really shook up the crypto space yesterday, besides Twitter going down and everyone and their mother having Twitter withdrawals, and definitely that was me too. I was so like, oh, what do I do now? I was tweaking a little bit. Now we have Brian Armstrong from Coinbase CEO and co-founder of Coinbase. Brian Armstrong put out this thread. Let's put it in book mode so it's easier to read. He says, we're hearing rumors that the SEC would like to get rid of crypto staking in the US for retail customers. I hope that's not the case, as I believe it would be a terrible path for the US if that was allowed to happen. Staking is really important for the innovation in crypto. It allows users to participate directly in running open crypto networks. Staking brings many positive improvements to the space, including scalability, increased security, and reduced carbon footprints. Staking is not a security. Here's a good primer. Then put a link to an article about Ethereum staking models. He says, we need to make sure that the new technologies we are encouraged to grow in the that are encouraged and grow to, wow, I can't speak today. We need to make sure that new technologies are encouraged to grow in the US and not stifled by lack of clear rules. Oh my gosh, this is such a great point. When it comes to financial services in Web3, it's a matter of national security that these capabilities be built out in the US. Regulation by enforcement doesn't work. It encourages companies to operate offshore, which is what happened with FTX. Hopefully, we can work together to publish clear rules for the industry and come up with sensible solutions that protect consumers while preserving innovation and national security interests in the US. Great point by Brian Armstrong. And we've been saying this for a long time, friends. This comes down to stifling innovation. We saw a huge attack on a bunch of staking platforms, especially it was just like Bitcoin 2022. I was at that conference. Everyone and their mother was there. All these staking platforms were there. Everyone was saying everything was fine and dandy. And then a few months later was just targets. Pew, 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 pew. All these different platforms going down. And it's almost as if the retail can't find a way to free themselves financially. Even just simply investing in crypto, it's so hard to do that because you have all these regulations. You have essentially, they don't want you to spend crypto, which is why places like Arizona are doing good with making crypto a tax-exempt property. I do believe this will happen in other places as well. It's inevitable. However, this is a big pushback. We can't be stifling innovation and pushing people away when they will go somewhere else. We discussed yesterday the UK. The crypto firms and the UK regulators are beefing with one another because the regulators don't want these people to operate the way they want to operate, which caused a lot of crypto firms to leave the UK and still serve UK customers. Now, to combat that, the UK government wants to have people that are crypto firms that want to serve people in the UK have to operate fully in the UK and have their headquarters in the UK. That is crazy. We're going to have a lot more of this happening. We're still really early. And I attribute a lot of what's going on, especially with regulation and all this law stuff, to us being early, and they just don't know what to do. This is a technology that no one can really control. It's just code. If centralized services like Coinbase aren't offering staking, then there's a bunch of DeFi platforms that you don't need to do any of this stuff, and you don't have to go through a third party. So that's kind of like my 2 cents on the whole thing. Joshua, thank you for the pew, pew, pew. The pew, pew, pew really just, I felt like it gave the emphasis that we needed to really get the message across. Pew, pew. No, Noelle, thank you for hitting that like button and saying hello. It's nice to see you. Again, friends, watch out for this staking. We really are still early. For real, we really are still early. With the mention of FTX in this thread that we have by Brian Armstrong, he was saying that, companies started operating offshore because regulation by enforcement doesn't work. This is what happened with FTX. They went to the Bahamas. Now, speaking of FTX, Sam Bankman Fried, Robinhood, their board gives nod to buy SBF's $578 million stake in Robinhood shares. Now, we do know that the government, they wanted to take it. SBF wanted access to these funds to pay for his legal fees. BlockFi wanted the funds because apparently it was owed to them with the deal with FTX. Just a little precursor. Oh, wow. Big Country. Thank you for that. They put a little hat and mustache on me on TikTok. That's so sick. I love that. Thank you so much. I appreciate it, friend. Robinhood's board of directors has approved a plan to buy back the $578 million stake in their company that was bought by former FTX CEO SBF and FTX co-founder Gary Wang last year. Robinhood confirmed in its fourth quarter report published on February 8th that it had received board approval to buy back the stake. Our board authorized us to pursue purchasing most of our shares that Emergent Fidelity Technologies bought in May 2022, said Robinhood's chief financial officer, Jason Warnick, adding the proposed share purchase underscores the confidence the board of directors and management team have in our business. Pretty spicy. The FTX co-founders bought $55 million shares of Robinhood stock, which was worth $578 million at the current price. The DOJ, as we talked about, when it happens literally a month today, the U.S. Department of Justice seized the 55 million shares, which was equating to around 7% of the company. We're going to see what happens with this, as we know that these shares were collateral to take out a loan from BlockFi. Warnick told CNBC on February 8th that Robinhood has been working with the DOJ on a plan to facilitate the buyback, but nothing has been finalized yet. Again, we're going to have to see what happens with this. There's still so much money on the table. Now, SBF buying these Robinhood shares, how did he buy these shares? Were these with customer funds? And if it was purchased back by Robinhood, does any of this go back to the customers? That's where I'm left every single time I'm looking at these cases, and all of the money being moved from this entity, this person seizing it, another person is given this amount of money. But where did the little people get their justice? Where did the little people get their justice? Cozy, thanks fam. Appreciate the love. Pete, nice to see you. Yeah. Wait, is Gary Gensler here? I thought you guys were talking about Gary Gensler. That guy's hilarious, man. That guy's so funny. Banks are also relentlessly coming into crypto. Oh, Lawrence, nice to see you as well. Welcome to the show. We talk about banks all the time, how they're coming into crypto, relentlessly finding ways to either come in through the decentralized end, the metaverse end, CBDC end, which we all know is inevitable. We all know what's happening. I really hope CBDCs don't happen the way it seems that they are. However, other countries are pushing out CBDCs. It's a whole other rant. Now we have today Bank of America, innovation to expand decentralized finance functionality over time. Pretty spicy. The correction in digital asset markets over the last year led to a shift in focus and capital from speculative trading to projects with real-world functionality. But DeFi currently functionality barely scratches the surface, according to Bank of America in a research report. Wow. Well, Bank of America now, you're getting zesty out here. The bank says platforms like Gauntlet are driving the evolution of DeFi applications, but cautions that regulatory barriers to entry, poor user interfaces, and limited functionality likely prevent mainstream adoption in the short term. Gauntlet is a financial risk modeling and simulation platform that acts as an advisor for application improvement. DeFi is an umbrella term for a variety of financial applications carried out on the blockchain. So they want to push their own platform. It's pretty clear that they have a platform that they are in favor of. They are right where they says DeFi functionality barely scratches the surface. 100%, that's facts. But we have to keep it decentralized. Decentralized. Don't give up your freedom for convenience, my friends. The inability to identify users, access credit scores, and perform AML KYC requirements creates regulatory headwinds and limits use cases to trading platforms and over-collateralized lending products, which also creates headwinds for mainstream adoption. Again, inability to identify users. They're saying they like DeFi, but they want KYC. Soul-bound token or non-transferable identity and reputation entities could be the key to expanding DeFi's functionality frontier, but the majority of existing applications are under 3 years old and will require time to mature, the note said. Bank of America, it says down here, says the majority of DeFi applications are immature, but we remain in the early stages of major change in applications that may take place over the next 30 years. 30 years, man, we don't even know what this space is going to look like in 2. You think we're going to know what it looks like in 30? The innovation that happens in this space is absolutely rapid. However, I digress. They said in the longer term, the banks expect the development of DeFi apps with the real-world functionality to increase the efficiency of traditional financial products and services, and it anticipates that these applications will evolve by optimizing the trade-offs between user incentives and risks. Exactly. Optimizing the trade-offs. Friends, again, do your own research, especially when big players like this are coming in. We already know what they're really into, friends. We discussed this. We were here for this. January 17th, Bank of America says CBDCs are the future of money and payments. They're saying CBDCs issuance may not happen for over a decade in some countries, but central banks are expected to adopt technological advances or risk irrelevance over the long term. Now, Bank of America, they liked CBDCs. They said they won't change the definition of money, but will likely change how and when value is transferred over the next 15 years, adding that central bank digital currencies have the potential to revolutionize global financial systems and may be the most significant technological advancement in the history of money. Friends, we all know the most significant technological advancement in the history of money is Bitcoin. Period. These types of things are very, very spicy, and not the good spice. We don't like not good spice, friends. Do not trade your freedom for convenience. We've done this enough in the past, and we will not continue to do that, especially when it comes to our money. If we are not in control of our money, then we are not in control of anything. Please keep this in mind. Olive, nice to see you. They think we just want digital money like it's a hobby for us. They're wrong. We want freedom and self-custody. Olive in the chat. We love Olive. We love Olive. Absolutely. We want freedom. We want self-custody. That's why we left the traditional financial system, because we want to be our own bank. We want to be in control of our value. There's fiat that's diminishing in purchasing power day by day, but there will only be 21 million Bitcoin to ever exist. Period. Savage Studios, welcome to the show. Vidik, myself. Yep. Why use CBDCs if they're independent coins? Yeah, there's private stable coins, absolutely. Other states like Texas, they're looking to do their own stable coin, and they said they don't like CBDCs. You think other states aren't going to agree with that? Of course they will. Guillermo, welcome to the show. More banks coming into the space. Let's continue, my friends. U.S. banking giant BNY Mellon exec says digital assets are here to stay. Oh, we knew this, friends. We knew this, but thank you, BNY Mellon, for, I guess, validating us. Michael Demisi, the head of digital assets at BNY Mellon, is adamant that the cryptocurrency market crash in 2022 won't waver institutional interest in digital assets. We already knew this, friends. We've been saying this the whole time. At a conference run by A4 Consulting, Demisi said February 8th that the digital asset industry is here to stay as institutional investors have a strong interest in crypto. Quote, what we see is clients are absolutely interested in digital assets broadly. He backed up his thoughts by referencing a survey conducted by BNY Mellon in October, which found that 91% of custodian bank clients are interested in investing in blockchain-based tokenized products. The survey found that 86% of institutional players are adopting a, quote, buy and hold strategy, which may suggest that they see cryptocurrency market as a long-term play. Friends, we already knew this. If you were here for the Daily Zest, if you're an adamant watcher, but if you're not, I'm updating you, friend. Don't worry. Got you. On-chain analytics were showing that people holding Bitcoin in their wallet for 5 years or longer, just holding Bitcoin in that wallet for 5 years or longer, has increased by 15 or 17%. People are hodling. We already knew this. We keep coming. We hodl on, my friends. Of those surveyed, 88% also said that a severe cryptocurrency market turndown in 2022 hasn't changed their plans to invest in the digital asset sector over the long term. This is a cool video that they put up talking about adoption rates of crypto that are still growing. They said that there's still more work to be done in Washington, D.C., which we know that's inevitable. They're going to have to come up with some sort of regulation when they figure out what's going on in this freaking space. Quote, we absolutely need clear regulation and real rules for the road. We need responsible actors who can offer reliable services that live up to investors' trust, which means that maybe BNY Mellon is going to step in and start tokenizing stuff. On February 2nd, BNY Mellon announced the appointment of Caroline Butler as the firm's CEO of digital assets to help drive the next wave of adoption for the bank's clients. She was previously the CEO of custody services. Friends, this is so crazy. Actually, crazy. Now, BNY Mellon launched its own digital custody platform in October, offering selected institutional clients the opportunity to invest in Bitcoin and Ethereum. Early February 22, they also announced a partnership with on-chain metrics platform Chainalysis. Yeah, to help track and analyze cryptocurrency products. Interesting enough, friends, I went and did some digging this morning. I saw this article. I was like, all right, I see what's going on here. We already know, just to catch you up, the New York Fed launched a 12-week CBDC pilot program. BNY Mellon, of course, is involved in that, just to keep that in the back of your head. However, I went on their website. I was doing a little digging because in crypto, we always talk about doing our own research. And that's what I did for you, friends. The rise of tokenization. This is on bnymellon.com. I was like, OMG, this is just confirming everything we talk about all the time. Of course, take everything with a grain of salt. At least they're acknowledging what tokenization is. They're saying it has the power to revolutionize the financial landscape, intrinsically changing how investments are managed, used, and monetized. The process of tokenization facilitates the creation of a multitude of new financial products, allowing every person and organization in the world to diversify their portfolio of investments on a global scale, regardless of income or size. They obviously acknowledge that this is a huge, huge thing. They give example scenarios about, people that make low income. She wants to invest. They said tokenization of assets involves the process of digitally representing real physical assets on distributed ledgers or issuing traditional asset classes in tokenized form. So they're saying on distributed ledgers. They're not saying whether this is something like Ethereum or their own type of blockchain, just to keep it in mind. Within the next context of blockchain tech, the tokenization is the process of converting something of value into a digital token that is usable on a blockchain application, or a token represents a share of ownership in the underlying asset. This process can work for tangible assets like gold, real estate, debt, bonds, and art, or certain forms of intangible assets such as ownership rights or content licensing. What is even more exciting is that tokenization allows for transforming ownerships such that traditionally indivisible assets can be fractionalized into token forms. This is, if not one of the biggest banks in the world, talking about tokenization. They 100% know what's going on here. They give a few examples. They say why it matters. They said since tokenization leverages smart contracts, it can manage both the financial investment as well as facilitate the voting and or ownership rights associated with the investment. Voting. What does that say, friends? DAOs, decentralized autonomous organizations. They said there's a possibility of incorporating a stakeholder capitalism model of popular management theories in the 1950s and 60s that promoted benefits provided to the wider community, not just shareholders. Again, talking about more about tokenization, barriers to adoption, and then new tokenization products, and they highlight what they really think is important here. Commodities and metals, art and collectibles, IP, which we know this is a huge thing, intellectual property in the space, sports team and athlete contracts. And then, of course, they bring the carbon credits into it, which is where the whole CBDC narrative comes in. However, they know why we like crypto. They know why blockchain is useful. Will this go our way? Be careful. They know why we like crypto. They like it for the same reasons. But will they make their own independent blockchains to make sure that it is centralized? I'm just providing the information, posing some questions. This is from BNY Mellon's website. Straight up. This is really the best chat. Thank you guys so much for being here. Shogun Crypto, thank you. I appreciate it. Nice. Welcome to the show. Jim, you made it. Nice to see you. Welcome. It's actually 3 p.m. I'm going live at 3 p.m. I will drop the link in a little bit. There's over 50 people here. Welcome, friends. Smash that like. Share love to the stream. We love love here. More banks. I'm not done. So we know BNY Mellon. We read this whole thing about how they are talking about tokenization. There is another bank talking about tokenization. And get this, German DekaBank plans to launch tokenization platform by 2024. This is a 105-year-old German bank that's planning to launch a blockchain-based tokenization platform in collaboration with digital asset firm Medico. We were reading about this when the original news came out, but this is an updated version. The tokenization platform infrastructure will be ready in the foreseeable future, and that will launch the first minimum viable product in our crypto custody solution. They added that the first test transactions of the tokenization platform are likely to take place this year. DekaBank's upcoming blockchain platform is developed in collaboration with that digital asset management system Medico Harmonized. The bank officially announced a partnership with them on January 31st, as we went over, my friends, planning to deploy Harmonize as the core platform for institutional digital asset offering. Oh, loady load. So much adoption within the banks. They can't get away from us. They emphasize that DekaBank is not planning to offer trading of cryptocurrencies like Bitcoin as part of its partnership with Medico because they don't like decentralization. That is because DekaBank is focused on regulated products according to the German Electronic Securities Act. He said, stating cryptocurrencies are tradable around the world, more regulated in some parts of the world and less to not regulated in other parts of the world. The implications that can arise due to these disparities are potentially very large and can carry very high risks. Why? Because they want you to use CBDCs and their blockchains and their centralized entities. Anyway, the new details about the upcoming digital asset platform come amid some major local banks moving into the crypto industry. DWS Group, the asset management arm of I don't want to pronounce that one wrong. I don't want to do it. We're going to call it DekaBank. One of the largest leading financial service providers was reportedly seeking to invest into 2 German crypto companies. According to some rankings, Germany also became the most favorable crypto economy in the world based on factors like crypto outlook, clear crypto tax rules, and transparent regulatory communications. So there was also a financial authority that issued multiple licenses to crypto exchanges, including firms like Coinbase and Bitpanda. Bitpanda, that sounds so cute. I love pandas. When I was little, I used to be obsessed with those. Pandas are so cute. Now again, friends, we do have more banks. We have a bunch of banks coming into crypto. It's all about tokenization. So we have BNY Mellon talking about tokenization projects, German banks, literally 100-plus-year-old banks jumping into this space. We even went over, if you guys remember, in Brazil. This came out January 16th. Brazil's second largest private bank launched its first tokenized credit note. So this was an equivalent of $1.95 million under a regulatory sandbox run by the Central Bank of Brazil, adding that it was the first financial market tokenization operation regulated by that monetary authority. So a bunch of banks jumped in this. So what does it say? Banks are coming into crypto. They are using blockchain. They want to tokenize everyone and their mother. We know why we're here. This revolution. If you guys are bearish, I don't even know what to tell you, man. Short term, I can't tell you anything about price. But what I could tell you is that all these institutions are coming into crypto. They're not going to stop. And there will only be 21 million Bitcoin. I can't stress it enough. I might cry because there are only 21 million Bitcoin and people don't remember that. They're like, oh, Bitcoin's this today. It's up this much today. Friends, if you're a trader, then be concerned about that. But if you want money that belongs to you, then be concerned about stacking that. Of course, NFA, I'm not telling you buy Bitcoin because of number go up. I'm saying to enter a financial freedom sector that's permissionless and trustless and that you own your assets. Because we know the barriers to entry might get more difficult and the accessibility to your money is not the same. I saw this right before I went live. New Hampshire could become an alternative for crypto firms moving to the Bahamas. New Hampshire is on the verge of becoming a national leader in crypto if its legislature follows through on recommendations made by a commission appointed by Governor Chris Sununu. The recommendations would establish a legal framework for blockchain and crypto biz in the state, providing clarity and certainty to crypto entrepreneurs and regulators while avoiding the onerous and largely pointless special rules federal regulators and members of Congress want to impose on the industry. Wow, that was a bold statement right there in Cointelegraph. The proposed rules would also protect customers, depositors, and investors. Now, like it even says here, blockchain businesses are really in a gray area in the U.S. People are trying different things in the U.S., but now what New Hampshire's framework is trying to do is remove the gray area, setting rules on how digital assets should be treated by regulators as securities, commodities, or currencies, and help ensure that they follow the anti-money laundering, AML, and fraud rules. While officials have their work cut out to lure crypto businesses away from the Caribbean, new startups will benefit as the new rules could attract more risk-averse investors. We all know that's inevitable. We know crypto, people are going to find a way. Now, New Hampshire wants to open this up to people. I do suggest you guys read through this article. It's pretty cool, but what they're saying is that they want people to follow the rules. And actually, there's someone from the Tron DAO that's working in New Hampshire. And this is a cryptocurrency advocate and Tron DAO policy lead, Andrew Hemingway, approves of the commission's work, what they're doing in New Hampshire, and said, "The live free or die spirit is evident in the commission's perspectives and recommendations," he said in an email. "This spirit is also harmonious with the ethos of cryptocurrency." So now, crypto people, we're trying to get in there. We're trying to put the right rules out there, and I really hope that does come through, and I hope New Hampshire is zesty with it and is open to crypto. Now, for today's last and final piece, I am sad to say that one of the OGs in this space, one of the OG platforms out here, friends, well, we're going to have a moment of silence, put some prayer emojis and hearts in the chat, because Local Bitcoins is done. Local Bitcoins, if you guys don't know, they really were a catalyst in adoption. Even it says here, it started 10 years ago and has averaged between $5 million and $7 million in weekly trading volume over the past 4 months, a far cry from 2017 when it surged above $100 million in consecutive weeks. They said trading will be suspended on February 16th, which is literally a week away, my birthday. When I turn 20, Local Bitcoins is going bye-bye. It's like we're both entering in different phases of our lives. They offered peer-to-peer crypto services. People were literally, a lot of people that I interviewed, even a part of their origin story was that they would go to McDonald's and get Bitcoin from strangers and do peer-to-peer transactions, literally what this space was intended for. This is their official note on Twitter. "Dear valued customers, originally Local Bitcoins was established to bring Bitcoin everywhere and drive financial inclusion globally. We've honored that mission for 10 years. We're proud of what we achieved together with all of you, our loyal community, in that time. However, we're sad to share that regardless of our efforts to overcome various challenges during the ongoing very cold crypto winter, during which our volumes and market share have continued to decline, we've regretfully concluded that Local Bitcoins can no longer provide a Bitcoin trading service. We encourage all customers to withdraw their funds from their Local Bitcoin wallets in the next 12 months. We will continue to actively communicate this message to all of our customers, sending several reminders in the coming months. Please know that our customer support team is available. We would like to extend our deep gratitude to all customers for being part of our Local Bitcoins community family. It has been our honor to serve you over the last decade. Sincerely, Local Bitcoins." Oh, that's so sad. So Local Bitcoins, unfortunately, they are done. Literally RIP, Olive, I really feel you, man. I really do feel you. I'm so sad about it. Nash, wow, if that was FTX, you would have been screwed. Yeah, because like they just shut down and they're like, okay, bye. And you know what? That's what happened with a lot of people, which is why you always take self custody in case something like this happens. And at least they're giving you time, to withdraw. That's good. However, local Bitcoin's peer to peer network is down. RIP local Bitcoins. Moment of silence. Absolutely wild. Guys, please give me suggestions on what you think I should do when I turn 20. Leave those in the comments after the show. I do have to run. I have a few things I have to do before 3 p.m. 3 p.m., there's going to be a zesty guest on the show. Digital Asset News, very informed guy. So make sure you guys check that out. 3 p.m. Eastern. So that is approximately 3 hours and 15 minutes from now. Make sure you guys set your reminder. The link is in the live chat. Also, once the stream ends, it'll recommend it right after and redirect you there so you guys could set your reminders. But again, thank you guys so much for joining me. I really do appreciate every single one of you in the chat. Thank you, Kevin. I appreciate it. Have a great day. Thanks, Nash. I appreciate you. John Jermaine, Randy, like everyone in the chat. Like, I really do appreciate every single one of you showing up, sharing love, spreading good vibes. That's what we're here for. And I'm so sick of like people just getting so angry on Twitter and like arguing with each other. That's not what we're here to do. We have to be united as one because we have a whole other fight to do. We can't be fighting each other when we have this big thing ahead of us where, centralization is trying to eclipse our decentralization. We're not going to let that happen. Exactly, Olive. Stay zesty with it. We're going to zest and invest, my friends. Thank you again so much for hanging out with me. If you enjoyed the show, please smash the like, share the stream out with friends so more people could tune in and know what's going on with crypto and everything beautiful about this space. And again, comment after this show is over what you think I should do when I turn 20, if you are bullish, if you are okay with where we're at with Bitcoin, and if you're excited for the next show at 3 p.m. Eastern. Again, set your reminders for that. Thank you again. Have a great day. And as always, stay zesty. See you later. Peace.